Hi everyone, welcome to the Asia Tech podcast version of the Blockchain Asia. I'm your host for today, Gustavo Liu, and I'm missing Michelle Wonderland. Hi Michelle, all the way here from Singapore. Michelle is right now in California, but she'll be joining me back here next week. Today I am joined by a Californian. I've got Kagen across from me. He comes from Irvine, California. He's visiting Singapore for 3 days.
I think
4 days.
Four.
And Kagan's been involved in the blockchain space for a while now. Actually, he was one of the first people that I started having a chat about blockchain. He told me to buy Ethereum at $80, but I couldn't get it because I was all the way in the US. And next to him, I've got Jose He. He is the founder of Bounty Technologies, and they're about to close their ICO. Prior to that, he was a serial entrepreneur, having founded Kazi and many other companies across in Singapore.
Yeah.
Welcome, Jose, and welcome, Kagan.
Thank you very much.
So today, we'll be talking about blockchain topics a lot on ICOs.
I'm in. You
Yeah.
sold me.
I'm down.
And actually today is going to be very interesting because Kagan comes from the sort of fund investment side of ICOs. And then Jose comes from the actual
Startup,
launching.
yeah.
Startup. You actually about to launch your platform. We already launched the platform. You are closing down your ICO.
Yeah.
And we'll be covering everything from how the current sort of weathering storm of
Exactly.
the ICO process. And then to kind of wrap it up, we'll look at not just in the investment side. Hopefully, we'll have time to touch on what are fungible and non-fungible tokens. I think one of the things that has become very interesting lately is on the sort of CryptoKitty search on pricing, right? So to differentiate the difference between those tokens versus all the other tokens that we're going to be talking about in terms of trading purposes, that would be a good sort of ending if we get to that. Yeah.
Got it.
So, Jose, do you want to start first?
Oh yeah. So a quick introduction about what we do. So I'm the co-founder of Bounty. So there were 3 of us when we started. So Bounty, basically, we are a game tech startup. What we want to do is to go on to a very powerful, passionate mission to empower everyday gamers to make a living while playing their favorite games. So we knew what we have to do to tackle the problem, because one of the biggest problems, which is in esports and gaming for the last 15 years, that hardly been solved, predominantly in Asia, is that of the 2.2 billion gamers in the world, only the top 3% of the gamers make the most money. In fact, they make more than 90% of the annual money. So
actually, can I add on, like esports is just recently been there was a report saying that it's actually illegal and it's a legitimate sport on the digital world, right?
We're so glad that the last few years, local authorities, government side, every country, every continent, they start to appreciate the good work that has been laid by gamers, people like probably our parents during the Mario Bros, or I don't know, all the different games that were being created from the 80s to the 90s. And let's not forget that gaming was like a period of time when you play too much of it, your parents would generally say, don't be a loser. From a Chinese family, right?
Yeah.
So what we wanted to do was to help everyday gamers to make a living, the 97% of gamers in the world. But we're not so sure what kind of technology we want to jump into to solve that problem. Lex, our CEO, he wanted blockchain to come in the picture. I was a little bit sensitive about blockchain because I was studying it, but because I wasn't well educated on that, so kind of like afraid to touch on that. And it was sensitive for a certain point of time. So
when was that? When did you get into blockchain?
Mid of last year.
Oh, okay.
It's a bit late, probably the same timing as you, when you miss out on the $80 Ethereum price.
Yeah, I think we started talking like around like early last year or something like that, but it was around the same time, roughly around there.
Probably I was a few months later, but I've been reading on that, companies trying to come up with their own ICO, Like, I have no idea what's going on. So then in the end, we decided that we have to embrace and stay relevant in the technological world. After all, we are a startup. So we said, okay, we bring on in ERC20 as a blockchain protocol to build on top of our product. And we launched the white paper, and yeah, game on.
Yeah.
That's
How
cool.
has it been so far?
That was beginning of this year, which is the subject we're going to discuss for tonight.
Yeah.
So by the time Bounty launched our white paper and want to get into the scene, we were a little bit late. The market itself has experienced massive amount of investment into the ICOs from 2016 and especially 2017. We ended with a high. So everything that goes up sometime, most of the time we understand it has to go down. So we launched our ICO when it was on the down.
Oh wow. Is that a good thing or bad thing? I mean, it's always like, when you, at least when it starts to pick up, you'll be one of those that will be selected, right?
So I'm a Chinese, so I believe in every crisis there's an opportunity. So we have to stay optimistic. No, but the truth to be told, it was really difficult because the reason why you want to do an ICO, launch an ICO, is because probably you want to raise money not through the traditional way. You don't want to sacrifice your company's equity. So you want to stay trendy and you want to be relevant. Okay, let's raise money through the crypto world. So we wanted to do fundraising so that we can build a product, build a team, scale up, marketing, community building. But it was a bit too late for us to get into the picture. The market was going down. It was very volatile. It was uncertain. And that was what we have to hurdle through for the first few months of this year, especially mid of the year. Yeah.
And you kind of also went ahead and did it anyways, which is quite courageous.
Yeah, we did it anyway because Gustavo, so there were some angel investors and VCs that were actually interested in our business, but we were a little bit stubborn. We wanted to stay loyal to what we wanted to do, which is ICO, so we don't want to sacrifice any equity. But in the midst of the year, we couldn't take it anymore, right? So, gentlemen, we decided maybe we should call back some of the VC and let them know that we want to have coffee with them.
Yeah.
So we emailed them, we called and say, can we meet up for coffee? And they are like, sure, come down to the office. And we have to explain, and they know, they were all very mature and very professional about it. They understand about the crypto market. And we were glad that they came in at a good time so that, so instead of just focusing on the ICO, one of the biggest thing we did to hurdle through was to also raise through the equity traditional fundraising.
Okay, that is awesome.
I've been seeing a lot of companies doing that. It's a big trend.
So actually, in that, when we're talking about ICO, this was a memory lane. Just yesterday, when I was in California last year, I remember Kagen was like, I'm gonna go on the computer at 3 a.m. Was it 3 a.m. or 5 a.m.? I wanna queue for this. And he was queuing for Aragon at that point in time. And it was when they first launched. And the next day he was like, oh my God, 20 million was just raised within 15 minutes or something like that.
Amazing.
They had a really good ICO. This was pre-big money raises, so I was definitely kind of blown away. There had been maybe a handful that were successful, and these guys, they did a good raise, and they have a good product that they're rolling out. So that company is a kind of a primitive that's required to do governance on all types of protocols. So I'm definitely keeping my eye on them.
So connected to what Jose was saying, what did you see that was different versus last year, for example, where the environment in terms of having all the people that were investing and looking out for new sort of tokens, right? As opposed to this year where Jose is saying it's kind of not the ideal type of market to launch an ICO. What do you think about that?
Yeah, so last year was something else. I think last year I had participated in quite a few. I know I have friends that participated in quite a few. And the big difference now is people are really actually looking at the project and evaluating the fundamentals. I personally can say that there was a point when I would buy things and not look at fundamentals. I kind of would speculate on them with the desire to sell it in a very short time frame. So now me as well, that doesn't even come into my mind. I'm just looking at projects where I'm very interested in the founders and the tech that they're building, and I'm seeing that from the conversations I'm having with other larger crypto holders as well.
Yeah, because I remember you telling me somewhere along like half the later part of the year, you were like, "Oh, dude, like I don't think like anybody's really looking at the technology anymore or the companies, right? It's just like whatever you buy at that point in time, as long as you got in early enough,
Yeah.
by the time you go launch the market, you would have tripled of 10 times your money."
Yeah, the expectation from the bare minimum expectation was you should double your money essentially as soon as the token hits the exchange, which now the most companies are giving away these pre-sales and they're giving discounts to large investors, and then as soon as the token hits the public market, they're just dumping it on the guys that got in late. And so oftentimes, we're seeing huge declines on the first couple days of public trading. So
actually, Jose, how was the experience in terms of, do you invest in ICOs as well, or was it mainly on the sort of the launch of your business?
So I bought into Ethereum and Ripple.
At ICO price?
No, I came in late, but it's pretty good as well. I bought in 20 cents for Ripple.
Okay.
Yeah.
Yeah, that's
and
pretty good.
so, I mean, I'm a holder. So when they hit about $3 plus when they were high, I still kept it. So so I've never parted in any ICO.
Yeah.
Because I think for all the reason I was too busy with my own ICO, trying to study, trying to understand, trying to blend in, and we did. Yeah.
And what was the sort of what was your journey like? How long did it take for you to, to complete this entire launch and start to raise funds?
So interesting. Like how Kagen mentioned, so last year was like a reference point that we took, which was bad. Because you're taking from 2017, moving to 2018, so you are not foreseeing the future. But we didn't. Anyway, like most entrepreneurs that make mistakes, we kind of speculate into the ICO, trying to do an ICO. So apparently last year, if you reference from successful portfolios, they have a white paper. So long as it's sexy enough, you're going to raise some money. But this is not what's happening in 2018. Since February and the second quarter onwards, they look at the team. The leaders, do they have the skill, the special domain expertise, right? And they look at your project, your tech, is it a protocol? Is it just an application? So a lot to factor and consider. So we had a bit of money at the beginning of the year, truth to be told. And that is the amount of money we have. Not a lot in our bank, and we have to decide two paths to take. Do we do a sexy ICO white paper, doing marketing? In fact, running ICO is never too cheap, right? It's quite expensive to do.
Yeah, you need to accumulate a number of ethers, right? That you need to pay for everything.
Yeah, this is just one of that. And this community building, the branding, the marketing.
Yeah. Developers and
the bar is very high now.
The foundations. once you get the money, you need to put it somewhere, and that you need to be very consult people where you're gonna transfer it.
You're right. So that was one path we could take. There was a second path whereby, hey, let's just build the product. Have a product, have a just tech team, no marketing, no community building, just purely build on the product. But we're not that sure whether that amount of money we have in our bank back then was good enough to build the product that users want to use, because we felt that we had not done enough research, recruited enough early adopters, done enough so-called survey with them. So we went ahead with our instinct to, all right, let's walk the first path, right? Come up with a sexy white paper and do our marketing.
That's pretty entrepreneurial. It's just head dive in first and think about everything else later.
So Gustavo, so within the first 3 months, of course, we, everything was dry up in our bank, and like everybody was doing marketing, everybody was doing ICO. There was a period of time, I think during Chinese New Year, we went for visiting. And one of my Indian friends that visited me, he was making a joke out of it. He said, Jose, I said, yeah, even my grandmother is doing ICO. So it was funny. But in my face, I felt that, oh my God, this may not be a good time, because that was also a period of time, Kagen will agree with me, people cashing out. There was a lot of projects whereby not giving enough confidence to the previous investors from 2017. So everybody was just exiting and just like it's a pump and dump going on. And retailers are losing confidence.
Right.
And that's when Bitcoin, Ethereum are not really helping as well at the same time.
Yeah.
And many of the project that was raising money were all, which is what the next topic is all about, is building on top of the technology of Ethereum.
Right.
So a lot of people
Are you guys on Ethereum?
ERC20. Okay. Yeah.
So like I think obviously like the part I'm saying here from both of you, what you're saying is that essentially sophistication from the people that are coming into the space have gone a new level higher, right? Why do you think that is? Are we talking about? I mean, let's talk about the U.S. Where do you think this entire understanding about blockchain technology adoption has sort of shifted? Because obviously here in Asia, what we see, and obviously we're very biased towards Singapore, because Singapore is such a convenient space to get connected and get resources. Everything's so near to each other. But where you come from, you have to literally drive everywhere. Like it's about 30 minutes, an hour drive from Irvine to LA. It's like an hour and a half. Where do you think that level of sophistication has sort of shifted in California?
I think that's a good question. In 2017, people were just chasing prices.
Mm-hmm.
Now, the level of sophistication has raised significantly. But I think what happened is we kind of ran out of the primitives that needed to be built. So in my opinion, and what I'm kind of seeing from my friends, is these ICOs, if they're not on the base layer infrastructure, things that are just vital to the ecosystem, then people are not going to be buying them or investing in them because it's too early.
Like raising kittens?
Well, apparently that's not too early.
Yeah.
But what we're seeing is these core level protocols like Augur, like what we're going to talk about later, these derivative protocols, they're getting a lot of attention, and people realize that a lot of the apps, just like in the internet, that they were too early last year. And so now that there's a new expectation.
Okay. In layman terms, could you just lay it out? What are protocols for the benefit of our listeners? And Jose has mentioned about the ERC20. Could you just explain it in very layman terms?
Yes. So a protocol is just a set of rules. The internet operates on a few core protocols. So these things are what everyone agrees upon. And to have a network, you can't have everyone operating on different rules, right?
Mm-hmm.
So these are the rules, and that is what a protocol is.
Good.
Yeah.
Thank you. And so this is really good. So we're talking about the sort of weathering of this entire ICO trend, right? We're not talking about the price of Ethereum or the price of Bitcoin today, because obviously those has fallen as well dramatically. But in terms of the demand, obviously it's driven more by sophistication. But based on the conversation yesterday from a meeting, there was a lot of private trade that is happening off chain as well. So actually, from your experience launching your ICO right now, do you get a lot of people coming to you saying that they want to do more sort of over the counter off chain trades?
So having breezing through the ICO winter for the last few months, we start to understand the demographics, the behavior of the investors from the crypto community.
Yeah.
So we realized that the offline funding on the crypto side, it's healthier than the online.
Yeah.
Like pretty much like
the institutional investors are actually coming more that way, right?
Family offices trying to convert themselves to stay relevant. And syndicates and pool masters. So that kind of organization that comes into the picture. But the retail market, the retailers are basically still watching from the side, as spectator to see what's going on. So has
the retail market money dried up, or are we talking about has the retail market, because they've kind of went in and chased that entire Bitcoin and Ethereum highs, right? Has that sort of slightly kind of slowed down, and then we're seeing more of the institution are the ones that were waiting behind?
So very good question. Gustavo, a lot of retailers, they are wounded. I mean, at least in Southeast Asia, in Singapore, or even the couple of trips that we made back recently from China, their leaders have been wounded. The organization that they represented for the last 1 year, they wounded. A lot of money that was raised, significant amount, ginormous amount. Yeah. They have not seen any return.
Well, a lot of fraud as well in certain parts of the world.
That
right?
Didn't help as well, right?
Yeah.
So, but there were a lot of angel investors that not yet in the crypto market, even until recently. Now they have come on board to say, hey, are you a family office? Hey, are you a VC? Maybe we can have some money, you have the bandwidth, you can look at the crypto side of stuff.
Yeah.
So things are helping in a sense whereby officers are stepping up to the game. But like you mentioned, the retailers are not. No, I
They're
think
not
they're
coming
wounded.
in,
Yeah,
yeah.
not coming as of yet. Yeah.
Just because they were the first entrants and they kind of had a bad taste in the
They were
mouth.
the first wave of investors last year, so they take
Right.
some time to recuperate from that.
And it's interesting what you said, because then you've got, and often at times in the startup world, when we're comparing, right, we're looking at like a lot of this what I call the fairy dust world, where it's on as a whole, it's yet to be proven. And some of them have been proven, but there's still a lot of concept that is on theory level. And this is where the VC money and the angel investment money is. And it's not that big, right? The bigger pool of money that is almost overshadowed by this, all of that publicity, is actually the family office money, the private equity money, all of those traditional asset money, the bank's money, the institutional money. How do you view that? Because family offices are probably one of the slowest to adopt new technology when it comes to compare, in terms of education process, just because they come from long line of wealth, family wealth.
Exactly. And they look at the fact that they have built a long line of, I'm not so sure how Kagen feels about this, but everything is about portfolio and,
Diversifying your portfolio.
Exactly, because everything's about reputation, right? If your reputation, it's about, having long successful portfolios of investment you ever made. This is your ROI. Look at my portfolio, so proud of it. You are in the comfort zone to keep the record really clean and strong, right?
Yeah.
Suddenly, if somebody like advise you to look in the crypto world, you probably look at it, but you just look at it. That's it. You will not really touch it because you have something else more important for you to protect.
Yeah.
But the of late, the last few months, I think it's quite encouraging, whereby Bounty and some other ICO company, they have encountered some family offices. They are willing to buy into the tokens and also do that's a new term these days, is the hybrid deal.
Yeah.
Whereby they buy into equity, but they also take up your token. The problem with equity is that it takes a long time for the investors to cash out.
Yeah.
Especially if the startup, they want to go for the Amazon, the Alibaba dream, you have to wait out like 10, 15 years.
Yeah.
So that won't sit quite well with some investors. So here comes the hybrid, whereby token sale, you can liquidate and cash maybe 1 year from now.
Right.
So hybrid deal, it's quite...
It's even more interesting because you kind of like take on the upside of the equity portion, but also the sort of when the tokens are being traded, then you take the upside of the exchange, right? And that is interesting because from that perspective, actually, where you're talking about is from the Asia family perspective. From the actual ICO issuance and all of that is coming up, I think the conversation also shifted in the US, right? Where the investors are coming in. And have you had any, like you've been having a lot of conversations with institutional investors, fund managers, because that is what Maxis AI is building the technology on the back of, which is kind of trading on some of the major ICO. Do you guys trade on ICO? Or is it purely just the bigger tokens?
So we don't trade on any ICOs. Those are very hard to trade because there's not a lot of liquidity. And so when you're doing machine and algorithm driven trading, you need a perfect environment. You can't have no available tokens to buy. You need to be able to go long and short, all these different things. So in order to keep things simple, we don't trade any ICOs. There's a lot of good people, a lot of good venture capital firms that are creating funds and investing in those ICOs. So we see that market served. And quite frankly, if you think about an ICO, there's no track record there's no data to analyze. So we feed our machines historical price data, and you can't do that for an ICO.
Yeah.
And so therefore you need a human to come in and look at all these variables. And
is there somehow like a comparative analysis or something, or so a company that has done somewhat similar in the equity space that could be compared, or how does the technology work?
So a lot of these firms they're setting up kind of a rule-based approach, or they're applying some type of quantitative approach where they can score the team, they can score the impact of the protocol. You pick, there's a million different ways to do it.
Right. And in terms of the because you've been on I've seen you watch like a hawk when you look at the ICOs and you actually time it to go in there. Oh. Do you still do that?
I have not bought any ICOs in 8 months,
Why?
12 months. None of them are interesting to me.
Yeah.
And like I said, now I'm focusing on the things that are detrimental to this ecosystem to scale.
Yeah.
And I think all of the scalability issues have not been solved, and therefore there isn't really any reason for me to look at some video sharing platform or these things that require a lot of transactions per second.
But compared to last year, because if this holds true, right, that investors have become more sophisticated this year compared to last year, then by actual fact, the projects should have been more sophisticated to meet those investors' demand this year compared to last year, right? So why is it that this year you actually haven't found anything interesting as compared to last year?
My favorite projects aren't doing ICOs.
What are they doing?
So they are raising capital in exchange for equity, and they are operating under the assumption that at some point in the future, their company will service the protocol in a way and generate revenue.
Okay.
And so that's how they'll provide a return to their investors. But quite frankly, oftentimes a token can add friction. And so a lot of these projects that I really like are already combining other tokens. So the idea of adding another token is it's a little bit too much, and they need to keep things simple.
So actually, this is a good transition to our next topic, because you are looking at platforms, right? And essentially, the platform that you have an article to. Do you want to talk a little bit about, give us an introduction of what the article is about? Yeah,
this stuff. This is what really gets me excited, and it's primarily because it's so close to home. We have an algorithmically driven AI hedge fund that trades Bitcoin and Ethereum that we're going to be launching next year. And we found that it actually is very hard to get the positions that you want if you're trying to go short or use leverage. And there's
and just for the benefit of our audience, short means that when you're
essentially betting on an asset to go down.
Very good. So and the opposite of that would be
going long. Right. And in order to go short, it's a lot more tricky. To go long, I can just buy the asset from you, right, and then hold it and then wait for some type of appreciation and then sell it and reap those returns. But to go short, you actually have to borrow the asset from someone else. So you would say, Kagen, you can take my Bitcoin. You give me a little bit of interest per day, a little fee for the risk that you're taking. And then I would essentially sell it immediately. So let's say the price of the Bitcoin was $10,000. I would take the $10,000, hold it, wait for the price to go down to $5,000. I would buy it back, and now I would have $5,000, and I would return to you that Bitcoin.
And it's really relevant to today's world, because that's how the banking institution has made their money, right? Is essentially nobody makes money by taking people's cash and putting it in deposit. Like, banks don't make money that way. They need to take that deposit because you have to pay an interest to your depositors and essentially lend it out. So your commercial department would essentially be in charge of looking for businesses that would need to use that money. And that, in the terms that you explained, would be sort of shorting the position, because you are essentially borrowing money to go and use it for other purposes. In the trading world, when we talk about shorting, is essentially where you would be borrowing or you will be going negative on that particular position because you don't have such an optimistic view on that particular asset class.
It doesn't actually have to be all about optimism. Yeah. It could just be that you
opportunistic.
Right. You're covering your position a little bit.
Yeah.
And you don't necessarily in a lot of countries, unlike Singapore, there's capital gains tax. And if you don't want to sell your long position, and so in the United States, when you sell that long position, you have a taxable event.
Yeah.
So what you can do is instead you can lock in your gains by going short on the asset, and there's no taxable event there. So imagine
even on the capital gain, you don't get taxed in the US?
Not until you sell the long. And imagine if you are a wealthy investor or an institution, and someone's telling you to get into crypto.
Yeah.
And you can't go short.
Yeah.
You can't cover your positions. And when you're in the United States, you're dealing with some significant taxes. How is that going to be something you want to do?
Well, in the equity world, you will buy derivatives to go.
Yeah, you buy options, you buy futures, you go short.
You go the opposite direction. Do you actually apply options in when you buy cryptos? Well, no, you can't do that
No,
right up to this point.
not
But
yet.
in like, that might be a strategy,
Yeah,
right?
yeah. I really love the story over here. Yeah, I think it's
Yeah.
good work.
So real quick, now the article. So we learned about going short and kind of reducing risk so that you can maintain these positions. This new protocol, which is kind of what I was referring to earlier, dYdX, they don't have a token, and they are backed by some significant Silicon Valley investors. So with this protocol, you can get those positions on the blockchain, on Ethereum. So right now, if I want to get a short position, I have to go through all these processes to trade on a centralized exchange. And at any time, they can essentially lock me out of that exchange. They control everything. And with this solution, I can go get it from this decentralized environment. I don't have to trust anyone. I don't have to rely on an exchange.
Yeah.
And also, the exchanges are siloed, right? So with this, it's on Ethereum, so it's global. So eventually, when people start using it, there will be a lot more available to access.
Yeah. Wow, that's interesting because for the longest time, when we look at currencies, I mean, obviously cryptos, you can't really make a one-to-one comparison to currencies, but essentially it's called cryptocurrencies. And the ability of the liquidity what currencies is able to provide, you can actually leverage off your position by placing derivatives options, right? To sort of hedge away your risk while you're holding one particular or you're too much exposed in a particular type of country or a particular type of currency. So from this manner, I think it's sort of like an option for people that are already holding particular type of tokens. For instance, the Jose's topic, which is about weathering through the winter of the ICOs.
Yep,
Maybe
exactly.
in the future, people will be able to place some sort of like derivative options if they are worried about ICO going.
I guess it's about time.
Yeah.
Someone has to do it.
Yeah. It's kind of hard though, because if you look at like even the equity world, the ICO world will be a little bit your early race for equities, right? Equity company. And in listed sort of exchanges, you can place like leverages. You can go short on a particular stock using an option. But in the startup world, you can't really short that particular startup.
Which might be a huge barrier for new capital to enter. So startups are super risky. ICOs are very risky. If you have the option to somehow hedge that risk away a little bit, it might be more approachable. And that
But who is willing to take on that risk? Somebody have to bear that risk, right?
That's true. That's true. But that might be one of the ways in the future that we can weather through this stuff better that you're talking about, Jose.
I foresee that. I mean, if that really go down really well, I believe there will be a government body. You'll be regulated. Yeah.
I don't know. Like, I mean, the whole purpose of blockchain is to decentralize the whole thing about government. I mean, we love governments, but blockchain is like sort of and I do get it. We had our first talk, the first episode, where Graham brought up about how Singapore wanted to be the blockchain hub. That was in the details. Are we talking about crypto hub, or are we talking about the actual technology that is supporting for applications? That is the difference.
Definitely blockchain hub. Yeah, I think the governments, they are very careful, but they are also very liberal with all the projects that's coming in.
Yep.
But I believe they want to position themselves as the number one strong as far as financial products is concerned. Yeah.
I want to quickly shift gear a little bit, because obviously this entire crypto world open up to a lot of different variety of type of tokens, and we've got your utility tokens, which was essentially the kind of first explored Bitcoin, Ethereum type of tokens, which later on the back when Ethereum kind of came around, people were like, oh, we can put stuff on it, and if we can code things onto Ethereum, then can we also put physical stuff onto it? Can we pledge it? Can we write contracts that would be able to sort of be referenced to a particular physical thing, right? Like real estate. And that is where like governments were saying, well, now it's going to be security token, right? Because you're moving something that is regulated into something that is deregulated. And now we've gone a new sort of step where you've got CryptoKitties and they've issued their tokens that is a little bit different in nature compared to a lot of those sliceable tokens where you can buy small little slices of it, right? You can buy 0.111 of Ethereum. Yeah. But CryptoKitties, you actually have to buy it in as a whole. And those are like differences of like fungible and non-fungible. So which one of you want to tackle that?
Well, what's your question?
Well, I want to know, like, can we explain it to the audience what are fungible and non-fungible type tokens?
I think you're definitely giving some good insight there. Fungibility means that you can exchange something for another asset in pretty much any environment. And think about it, if you had 2 different cows and they had, or let's say you had a cow, or you had 2 different types of livestock. Yeah. You can't simply just exchange one for the other, right? Because they have different attributes. They're very unique. You know, you might have a nice name for one. I don't know. It's your pet. And so it might have some significant value to you. And so it's the same thing with these CryptoKitties.
I wouldn't mind slicing my dog in half and like trade it for a
I know
poodle.
I'm going to tell your dog you said that.
You would do that.
Later.
He's a good dog.
He's a good dog.
Yeah. So essentially what you're saying is that each token is actually a kitty in itself.
Yeah.
And you are growing that kitty?
Honestly, I haven't fully looked into the whole kitty thing. It's not something that interests me that much. But apparently you mate them, and then there's some type of random.
Whoa.
Yeah, you mate them.
So the tokens mate each other and they give birth to new tokens?
Yeah.
That is insane.
So I guess there's some type of synthetic simulated DNA type of algorithm they've come up with.
Wow.
And when one kitty's DNA combines with the other one, there's a new set of DNA.
Do they give birth to 9 kitties or like just 1 kitty?
I think it's just one. And
well, Jose, actually, does this fall part of the esport world? Because it's the gaming sport, or is this is a different category from esport?
So to be honest, I spent about a couple of hours looking to CryptoKitties, and
you bought how many again?
No, I didn't buy it. But
was that Persian or Himalayan?
Oh, I was amazed by the kind of headlines and the news they've created for themselves, and a lot of people.
And the price.
And the price, it went up to $41. I'm pretty sure. When they're picking. So I'm trying to fathom and understand what was the business behind it, the value, true value trying to create. I think it's people who love kitties and the story behind it. I think the story, I'm not so sure whether Kagen will agree with me, but the storytelling was sexy enough for people who believe and loves and passionate about kittens.
Well, I think it's also just about the right time in this generation, right?
Yeah.
Where that novelty and the sort of the new concept, and I'm not sure how much do the kitty breeders actually do understand about the genetics that they are passing along and breeding.
Here's the thing. When a market gets established where you can resell something at a higher price, people step in, they want to speculate. And I think that's what drove the kitty thing. I don't think we have any kitty. There's no way people are paying $100,000 for a synthetic digital kitty. I'm not buying it. They're buying that so they can sell tomorrow for $1,000 more.
You never know. Maybe their kitty just died and they wanted something that would live forever.
You are 100% right. But I think to comment on the gaming aspect, there's a lot of chatter about being able to take these digital assets that you're earning in games right now, which is super common, and being able to sell them or take them out of that game or out of that ecosystem. And that's a lot of value, right?
And the beauty of it is you own the whole piece, right? Yeah. It's sort of like in the old time when people used to collect baseball cards. You can't slice that baseball card or your antique notes into small pieces because it would just entirely lose its value. So you have to find a whole new sort of system to put it together and keep it together while it changes hands. Mm-hmm. Isn't that like how...
Now you're a fan.
Maybe if they came out, I'm more of a fish person. Maybe if they did crypto fish,
fishes.
Yeah. I'm not that much of a cat person, but you know,
maybe. That might
I
work.
saw something. There was a an Asian-based event in my area, and they were selling like the astrological animals or something.
Like
So-
we're talking about like Pisces and
Yeah, like you could buy a dog. I don't know. You could buy like Year of the Goat. I don't know, these different things that
Chinese
culture
zodiac.
like.
Oh,
the zodiac. Yeah,
Zodiac,
sorry,
yeah.
so my
Chinese
bad.
zodiac.
So you can get those things, guys.
Mm.
It's all about community building, the fans, number of people who follow and believes in that. Like I can come up with something which is really philosophical or like a feng shui, like a purple astrology, like ornaments, and maybe we have a technology with that which is blockchain and start selling. If I have enough fans, enough customers, enough community building,
Yeah.
I think you might just
And the influencers community is kind of already building on the back of that. That is how they issue sort of reward system. They issued some kind of gift system where it would just be traded and raised in value. And it was a matter of time before they moved on to the crypto space.
yeah.
This has been a really phenomenal talk, guys. And time flies. It's
Wait,
been
wait. We're done?
No, really?
Yeah, I know. Time flies.
I guess I have to come back to Singapore then.
Yeah, you have to. And we'd love to have both you and Jose back in the show.
Definitely.
And I would like to wish Jose best of luck with your raising of the ICO.
Yeah.
Maybe Kagen will be in the computer tonight and like
I want
watching your ICO.
to. I'm
Probably
ready,
he'll come in for the Series B for the equity side next year. Yeah.
I'm ready to jump in on the end product, and I want to start. I'll go buy whatever. What do I need to get?
Yeah, he was
Xbox?
asking about a
Yeah.
product. Yeah.
We don't even need to know what it is for. Like they just do it the traditional way. Just go in and buy.
Yeah. And you'll buy my fish coin if I come up with one.
Yeah,
Crypto
if you do
fishes.
crypto fish, I would if I can breed them and have different type of genetics being carried out.
Gustavo.
Well, thank you very much, Kagan.
Thank
Thank
you.
you very much, Jose. So I have just one more question. So if any of our audience or investors wants to find a little bit more about Bounty Technologies, how can they reach you, Jose?
They can follow our social media, Bounty as in BOUNTIE. And of course, visit our website, www.bounty.io. Or send me an email, jose@bounty.io. Until then,
Yeah,
Jose.
Jose doesn't buy. Just
I don't.
write him an email.
Occasionally.
Yeah, he's not a kitty.
So we fly a little bit under the radar, so you'll have to reach out to me directly. I think LinkedIn is a good place. You can just search for Kagen, Kagen, and there's not many out there. But my last name is Atkinson, ATKINSON, or go to Maxis, MAXSYS.ai.
Thank you very
Nice.
much, and I look forward for your next trip to Singapore.
That's right.
And you are around, so we'll bring you back in the
Base
show
here,
very
yeah.
soon when Michelle is back. And hi, this is what you missed, Michelle Wonderland.
Hi, Michelle.
Hi, Michelle.
This is the Asia Tech Podcast, Blockchain Asia, and I'm your host for today, Gustavo Liu.
Thank you.